following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as the ever-expanding Options Insider Radio Network. And before we dive in, I just want to give you a quick reminder, if you're going to be in Chicago in about 2 weeks on May 15th, then we'd love to see you at the CBOE for our Options Insider Unusual Activity Forum. You can find out more information at theoptionsinsider.com. All the great guests, all the great topics, all the great bonuses you get when you sign up over there, theoptionsinsider.com/events to learn more. And we'd like to see you in Chicago on the 15th. And joining me on the old all-star panel today, starting off with the man who's beaming in all the way from the great town/city of St. Charles, Illinois. He is none other than Uncle Mike Tusaw from RCM. Uncle Mike, welcome back to the show, sir.
Always gets me fired up on Mondays and Thursdays when I hear that music at the beginning of the show. Let's get this thing going, yeah!
It is a great little theme to get the juices flowing.
It does.
It makes you want to do some option blocking. And speaking of doing some option blocking, we are also joined by the man from Option Pit. It's been a while since he's been on the old show. Good old Mark Sebastian from OptionPit.com. Mark, welcome back to the show, sir.
Hey, how's everybody doing? The world is the best place ever. Go me.
We've got a high energy, high optimism show in store for you today, listeners.
There we go.
I'm looking forward to it.
What we're known for here.
Yes.
High energy, high optimism.
And speaking of high energy and high optimism, rounding out the old all-star panel today is the man known as the Viceroy, holding down the Options Express seat on the old show. He is good old Alex Jacobson. Alex, you have a lot of optimism and a lot of enthusiasm to catch up to here.
Boiling over today. That's how excited and enthusiastic we are here today.
Hey-o. Someone was on Facebook.
Yeah, there we go. All right, with the team assembled and our enthusiasm well in place, we're going to keep on rolling right into the trading block.
The trading block.
All right, those bells mean that it's time once again for the trading block, where we break down the day's activity in the old street. And it was yet another yin and yang day, another yo-yo day in the old markets. We're down 1%, we're up 1%, we're down 1%, we're up 1%. Today we were on the latter half of that coin. Most of the major indices up about 1% on the day, and the good old VIX cash selling off nearly a full handle to 13.59 on the day. So the broad indices were rallying, but I think a lot of people were focusing today on Facebook and the extended love that came out of good old FB, closing today up about 5.5% to close at nearly $29, $1.97 on the day. I think that came as a surprise to some people because I know the initial tally of the earnings wasn't too great, but I think they've surprised some people on the mobile front. That's, of course, where a lot of people have been concerned about the outlook for Facebook as more of the web traffic migrates to mobile and away from the Facebook website, how they were going to monetize that. And things like Facebook Home seem to have appeased the analysts, at least for now. Mark, what did you take away from the Facebook earnings and the resultant rally that we saw today?
Yeah, the mobile stuff, that a lot of people are concerned about Facebook and how it would convert over to the mobile side, and I think this quells a lot of those fears. It also kind of quells the Facebook fatigue that people are like, oh, I'm so tired of Facebook. Oh. Yeah, you know what? You're tired, but you're still watching it. You're still on every day to see if somebody posted a funny video of cats falling off couches on their homepage. You know who you are, everybody in the world.
Or they're on there to keep track of their old high school boyfriends and girlfriends.
Exactly. Who's my ex-girlfriend dating now, and how much better looking than me and bigger than me is he? So I think it was a real. The one thing though, I think we talk about the good earnings. The people that got beat though were the premium buyers. Unless you bought an at the money or a one strike out of the money call. Even with the big move today, you lost money. The 28.5 calls were a wash. The 29 calls were losers. And so, this was, and I wrote this up on my blog today. This is maybe the most perfect example of kind of the earnings premium vol crush that we've had in some time. Apple might be another example. The two of them combined. The two stocks that all the retail traders love and go out and buy calls on, both completely underperformed their straddles and got completely earnings crushed. So a real clear and a classic example, though, in Facebook today.
I think that just gives more fuel to the fire to what we've been talking about a lot on this show and other shows on the network of late, that, you can get your free gamma and get some stuff off prior to the event, but maybe you close out prior to the event if you're long that premium. Unless you really, really have a sense for where you think this thing is going and you think you can make that back. I think 9 times out of 10, you're better off closing that baby out before the balloon pops post-earnings.
Concur.
Save some bread, buy a spread.
Ooh, LinkedIn down $20 after hours.
Yeah, that's the one I was going to get to next. Of course, we do have some earnings right now. And talk about straddles. That straddle was trading at about exactly $20 when it went out at the after hours. So right now, LinkedIn closing at 201.67. Front one straddle trading almost exactly $20. The 200 straddle with a buck or so of juice, and went down about exactly $20 in the after hours. So fancy that, how that works out.
Yep.
Amazing how that math works out.
Yeah, that's incredible. Yeah, here's the thing. Now, this might end up being one of those stocks where premium sellers and buyers can win. Don't be shocked if this catches a little bid here. Facebook did something similar last night. So one of the things that I've noticed is with all the major names is that even though the premium sellers won, if you were a premium buyer and you were willing and you traded after hours, you could make money. The Apple 400 straddle, Apple ran to 430 overnight before it settled to 395 the next day. You had ample opportunity to scalp around the straddle. And if you didn't, that was when you lost. So, and that's really where you didn't make money.
Yeah, Facebook had a similar thing. They had a $3 to $4 range in the after hours as well. So if you're able to scoop the bottom and sell the top, which is a difficult proposition, and you have the savvy to understand gamma scalping, and you have the account size to be able to get off some underlying in the after hours, it could have worked out for you. But those are all very much mitigating circumstances that unfortunately a lot of our listeners don't have, particularly the latter part, the account size. People tend to get a little squeamish about letting you unleash size in the after hours. Again,
Mark, any discussion of after hours in Vegas?
In Vegas, well, there were a lot of things discussed in Vegas, including many things discussed in the after hours time frame. But I don't know if after hours was among them.
But it didn't come up this year, extending trading on into a pre-open and post-close session.
I beat that drum quite a bit last year. and I got a resounding meh overall on it. A few people were excited. The guys over at Box seemed pretty enthused about it. Most of the established exchanges seemed like it was too much hassle for them to deal with it. So I didn't really beat that drum this year, particularly with all the other things going on, not the least of which being the CBOE just completely screwing the pooch. That kind of seemed to take over a lot of the narrative of the event while we were out there, and we'll get to that a little bit later in the listener mail segment. A lot of people actually writing in with different variations of questions on that theme. But yeah, this year, unfortunately, no. And those would be good scenarios. I know there's a lot of back and forth. I know, Mark, you're not overly enthused by the idea. Tusaw, I think you're kind of lukewarm on it. I know most of the brokers aren't enthused about it because they have to staff it, but those are examples where if you had that long call, you could sell it out and then actually close out the position, and then it'd be a little bit more straightforward for a lot of people than scalping the underlying. And at the end of the day, it could make being long premium a more viable thing for a lot of retail customers, and that's why I've always been a fan of it. Obviously, the higher end of the spectrum, who's savvy enough, could get around it in other ways. But I think if we can open that net a little wider, it might be an interesting thing. Whether that offsets all the costs of having staff all that time and everything else, I don't know. But it is, I think at the end of the day, with volumes everywhere else pretty much declining, I think the industry is foolish to kind of turn up its nose at any sort of ancillary volume, however difficult it may be to go after.
You know what? It isn't going to be a staff issue much longer, because all the e-commerce people in the space really now run 24 hours. It's going to be the McDonald's and Wendy's keeping the drive-through open all the time. It's really becoming an issue of fixed costs being so high that extending hours might finally be embraced by the firms.
There you go, Alex. You're the first person, anyone on the broker-dealer side, I think, to express any sort of support for that. So we'll mark you in the plus column. And when Uncle Charles comes knocking on your door saying, "Why'd you say that?" I'll be sure to leap to your defense. Why did you commit us to such a thing?
Uncle Charles.
Think about this in reality. Here at OX, we used to not be a 24-hour firm, and then when Schwab bought us, Schwab is a 24-hour firm. Somebody answers the phone 7 days a week, 24 hours a day at Schwab, and we are evolving into a 24-hour firm to bring that kind of Schwab business model here. So listen, the desks are open, futures markets are open. So if you do as big of a futures business as we do, the reality is you're going to have some staff here all the time, and I suspect. Although it will require the OCC board, I suspect some of your smaller exchanges, to your point, Mark, are going to try to carve that niche out and say, let's go, with an early opening session, a late close session on, 25 names or the names that have the weeklies, maybe the top 100 names. But I don't suspect it will be that far away unless the large exchanges drag their feet at OCC.
I wouldn't be surprised to see some of that. I've heard a lot of feet dragging being tossed around there. But let's look at the example we're talking about now, LinkedIn. They closed at 201.5 roughly, got down to about 181.5, so down about exactly $20, which is pretty much exactly where that front week straddle went out. So if you were the savvy customer right now and you were able to scoop, you have one lot of the straddle on, let's say. If you were savvy enough, you could have maybe scooped it around 181.5, maybe 182 if you got the pure bottom there. And now it's drifting up already. We're seeing it trading at 186 right now in the after hours. So it's already bounced about 5 handles off that low point. So you could have done all right. And if it retraces back like Facebook did, you could have a decent scalp on your hands, But I think that's probably a small subset of our audience. That are people who probably would go to Mark and would have a mentor and would be savvy enough to know this stuff and the account size to do that. Alex, do you see much of that in your accounts? A lot of people slinging underlying against their stock as a way to get any sort of after hours liquidity there?
Yep. Yeah, it's becoming a larger and larger business. And one caveat, obviously, the liquidity still is not what you would like. But as I said, I sit across from the desks here, and we have people now who come in and start their day at 3:30. It's a decent business. It went from being kind of a one-off business to now it's a decent business, and everybody gears up for it because you're going to be there 24 hours a day. I mean, it's becoming a fact of life.
with everyone gearing up for 24 hours, like you said, I think with the weeklies kind of coming out of the gate a little bit, shall we say, less robust than a lot of people hoped for perhaps a year ago, I think maybe we might see a little more people turning towards this after hours as a way to extend some of that volume. Now, getting back to LinkedIn for a second, Uncle Mike, I know about a year ago or so when Kavanaugh...
It's already up. It's already $8 since we started chatting.
Yeah, it's up about 6-7 handles since then. So yeah, if you had your scalp, you're doing all right. So if you're listening to this show live, and no one is, then we don't offer that option, then you certainly did all right with that scalp. But I know Uncle Mike, probably about a year ago when it used to be Federal Holiday Mike in your place, he was quite enthused with LinkedIn around the 97-100 handle. Have you guys been playing in and out of it since then? You still watching it, or you completely washed your hands of that one?
I am not playing in that book. I occasionally dabble in Facebook, and I'll probably look to start getting into it again if it comes down a little bit with short puts. I've been just doing that, and I think I'm one of the I have some of the few people on earth as clients that can say they're actually profitable in Facebook from our short puts. But staying away from LinkedIn, it just goes up too fast and makes too much money for us to want anything to do with such a thing. No.
Why would you touch such a beast of a thing?
Yeah, what's the fun in that? No, on a serious note, though, it's one that we have dabbled in Facebook, but we have not done anything with LinkedIn. Trying to just focus our approach, trying to stay a little bit more focused with things, and that's one of them where for some small positions in a long-term holding, I wouldn't have a problem with LinkedIn at all. Obviously, it's performed tremendously, but in terms of with options, it would just be like it's kind of like collaring Apple on the way up and hoping to get 70% of the upside. Oh wait, we did that.
Heyo.
All these subtle plugs here for RCM. So what has been taking up all your time? Is it just the 40-plus handle move in Apple that's been taking up all your time these days? Or are you looking at Ford? You trading in gold? What are you up to out there?
Well, primarily gold's probably one of the things that I'm looking at right now, and a couple of shorter-term things. With Apple, we're just selling some weekly put spreads on it, getting a little bit of income, nothing too serious on that. With gold, we did roll down the put when we had the dramatic move down, and I sold the 143 weekly covered call this about a week ago to collect some premium from that to try and finance that put. And time will tell tomorrow. We'll see if the 143 holds off or not, if I can, for lack of a better term, slip one by the goalie, so to speak. I've been doing that, and so I'm right on the edge with a lot of weekly premium tomorrow, so non-farm should be interesting.
Good old non-farms. Always something to watch. Always something to keep you going in the morning when you're sipping your coffee. Give you a little something to get out of bed for in the morning. And speaking of something to look forward to, we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and welcome to the Odd Block. This is, of course, a portion of the show where we break down the interesting and or the unusual options activity that was lighting up the old tape. And aside from some of the big moves we discussed lately in Apple and Facebook and others, wasn't a whole heck of a lot of size unusual paper lighting up the old tape today. What we saw was a lot of smaller trades and some smaller names. Still qualifies as certainly sizable from the perspective of those names, but perhaps compared to some of the larger trades we've seen on the odd block, not exactly market moving. Let's start off with IQNT. This is Neutral Tandem Inc. They closed today at $4.75, and this is the name that does about 200 contracts a day, a whopping 200, doing over 2,000 today. The bulk of that looks like it came in a couple of size trades, actually, all on the call side. We saw about, the May 5s going up about 7, almost 800 times today. And it looks like it might have been a roll out to June. The 900, the June 5s going up. The May 5s going up for about 20 cents. And I don't have the price here on the Junes. But yeah, looks like a lot of rolling paper going on out here in IQNT. Is that what your takeaway as well, Mr. Sebastian? That
is my takeaway. I always thought that IQNT stood for I quit, no time. But I guess not. Yeah, lots of, looks like, May to June, and a huge, nice little pop in implied volatility. I mean, what's going on here? They're nice little pop in the stock, nice little pop in implied volatility. This is one where people are saying, oh, wow, look, it's $4.75. Rather than just buy the stock, why don't I pay a bunch of premium for the June 5 calls?
Yeah, they just lowered their revenue guidance and raised their EBIT guidance. So there is some stuff going on out there. Of course, they're nearly $1 wide in the after hours. So talk about thin and illiquid.
I know.
On
Neutral
this one.
Tandem. That's quite the name.
Yes, very non-committal.
Yep.
We're non-committal and we're alongside you at the same time. So there we go.
Exactly.
All right, next up.
It's like we're roommates. We don't particularly like each other. We found each other on Craigslist.
I think they're just throwing terms together. They're just throwing terms together out of an encyclopedia. It's probably some Chinese firm just looked it all up and said, okay, this makes sense. Let's go.
Yeah.
All right, next up, we have good old Monster Worldwide. It's where the world used to go for their employment back in the big
and
dot-com
now nobody
days.
does.
Yeah, I never really heard of Monster in a long time that anyone's really rolled out there or rolled. I got rolls on the brain. Anyone's really using it that much. Same story out here in Monster. Almost exactly the same story, actually. We got this cheap stock south of $5, closing at about $4.70, and another looks like a size roll here on the 5 strike. Everyone's just loving that 5 strike and extending the love out to looks like June in this case.
That's a calendar. That's not a roll because the guy was the open interest on the May just isn't there. So I think it was a time spread.
Oh, actually, looking at it again, yeah, it's only 400 open on the May 5. So it was about 2,000 total listeners that went up on this trade. So yes, it is indeed looks like opening paper. Not bad. And another one, like I said, he likes his Monster, picking up some Monster out there. Apparently, this guy thinks this thing's going somewhere. Like I said,
I think that they're down the line they get bought out by somebody. They'd be a good fit for like a Facebook.
Yeah, at this point, I'd imagine their ad revenue and a few other things popping in there probably might come close to $3 or $4 a share anyway. So you got some value in there, and you could just pick up
and the
rest.
Monster.com Bowl.
Oh, you're right. They do have that, don't they?
I don't know if they still do, but if they do, that's the other thing you get. I'm waiting for the Facebook Bowl. That'll be fun. The Face Bowl. Isn't that what we'd call it?
I don't even know what that would be.
Face Bowl, everyone would assume it was named after the character from the A-Team.
I would pay to see that bowl.
Yeah,
I'd go to the Hannibal Bowl.
Oh, yeah. Well, yeah. Except then everybody's thinking Hannibal Lecter, not Hannibal.
Yeah, that's true. So maybe we have to make it the Murdoch Bowl.
The Murdoch Bowl would be awesome.
I would pay to see like a 70-year-old Dirk Benedict, however old he is now, running around on a football field.
Well, George Papard is no longer with us.
Yes, unfortunately. We'll play a sad note in his honor. I love it when a plan comes together.
Funny. I was a beta in college, and they made you memorize famous betas. And one of the famous betas they made me memorize was George Papard.
You say you were a beta girl?
A beta.
Oh, okay. I said you were a beta girl.
No, not a beta. My wife's a beta girl.
Oh, okay.
That's back when he was the greasy meatball sandwich.
Yeah, that's exactly right. But they made us memorize famous betas, and one of them was George Papard.
There we go, listeners. Your George Papard 18
George
trivia.
Papard and Wendell L. Wilkie. That's the other one.
For the day. You know what? I think we have to keep rolling on with the show. So I think we'll cut the old odd block short because we have a lot of other small ones. We could spend a lot of time on this, but we got to keep rolling because a lot of other stuff to get to. Of course, if you want to read more about what we're talking about in these and any other names today on the old odd block, then surf on over to theoptionsinsider.com. Click on the homepage, click on the unusual activity call out there on the homepage, and you can find all this information and much more in greater detail. And now we're going to keep on rolling right on into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, welcome to the Express Block. This is, of course, the portion of the show where I hand the reins over to the Viceroy, and he takes us deep behind the curtain of Options Express. So, Mr. Alex, what is cooking over in the land of OX today?
So 2 topics today. I'm going to talk about a technical innovation, and earlier this week we released our new iPad front end, and I was playing with it last night. Actually, my iPad sits at home, but one innovation is we now have what's called a quick trade function, which means no matter what screen you're on in the iPad, you can tap a button and it opens up a trade ticket. So that's especially useful for the active trader, because with most platforms, you've got to navigate a way to open the trade ticket, and the iPad has enough real estate now that you can open up the quick trade. A couple other points about the new iPad front end. You can see positions by strategies. So that's especially cool. If you're a condor trader, you can bring up all your condors. But if you're a condor trader and a butterfly trader, you can just look at your condors or your butterflies independently of one another. The other thing it allows you to do is to find and search orders and strategies by symbol, which again is really cool. As I said, I was playing with it last night. And of course, when I'm playing with it at night, the markets are closed. But it's a really innovative front end. And, a couple of years ago, when everybody started to create mobile platforms, I think some of the attitude of the industry, including mine, was people would not really trade off mobile. Mobile would be more for price discovery, looking at quotes, trying to keep up with the market, but you kind of run to your desktop or laptop to trade. I, of course, have been proven wrong, and people aggressively trade off mobile devices, and the new innovative iPad front end is really cool. If you're an OX customer and you haven't played with it yet, go to the iTunes store, download the new app, the iPad app. You can get an iPad mini. It works really well. There's a lot of landscape there, and play with the quick trade. I was like a kid in a candy store last night playing with the quick trade, the ability to build up or bring up a trade ticket just by hitting a little box on the screen, but your screen stays intact. So if you're looking at quotes, or if you're looking at charts, or if you're looking at a balances page or positions page, you can pick up the trade ticket. That's really cool, really innovative.
I like that. So it doesn't pull you away from the other things you're looking at. You can still put your trade in and still look at whatever analytics you're looking at the same time.
Yeah, exactly. And that's the thing I've come to realize in the brokerage space. Probably the thing I understood the least when I worked at exchanges is how competitive the space is for tools. And of course, what happens now is the mobile people have brought out this innovation, and now you have the desktop people who are going to say, okay, when do we get it? So it's great because in a sense, every time you bring out a new front end, you innovate to a degree and you create traction for, the other platform, the other methods of trading. As I said, I was a disbeliever at first when I came here that people would be trading on iPads, on iPhones, and on Android phones. And I've been proven wrong. I mean, people trade off anything they can get their arms around now, and creating product to that mobile market is a phenomenal growth business. I mean, one of the things we look at obviously is, accounts that come in and new accounts and what brings them in. And mobile has been a big driver of growth here.
Doesn't surprise me at all. Half the people I see trading these days have some sort of mobile device, smartphone, tablet, what have you. I always hate it too when the brokers they tend to kind of go halfway with it and make one app that works for the iPhone and the iPad, because then you have all the orientation issues and everything else like that. So I do like that OX is doubling down and building an experience designed around that larger form factor, because there is a lot of stuff you can do with it. Like you just said, you can open up the trade ticket, keep the other analytics up there in the background, and do a lot of things with that real estate that you can't do on the phone. Quick question, Alex. You said you can get the quick trade ticket. Can you get to the all-in-one trade ticket as well and do things like walk limit from the mobile platform?
No, not yet on the iPad, but that's coming. And again, that's an issue of computing power and real estate. But to your point, you quickly begin to realize how competitive it becomes in the industry, and how, customers who come to this and they ask the same question, you just asked. Walk limit is a fabulous tool. Every time I demo it, and I'm guilty of this, and I'm going to be guilty of it now, I get 5 minutes to demo it. 11 minutes later, somebody's hit me in the head and say, okay, enough already. But innovations like the all-in-one trade ticket, where you could do all 4 legs, see the NBBO, enter orders, between the NBBO, and now with walk limit, you can set your limits and let the machine walk them down. The options exchanges, 2 of the options exchanges don't charge cancel fees on spreads. Hopefully that's going to go to 4 of the exchanges quickly. It's a terrific tool, and the iteration of walk limit they're working on now, and again, I get in trouble because I front run the product development people. We're going to let you put a clock on walk limit. So right now, walk limit just does a maximum of 11 iterations in 2-second clicks. But if you're someone out there who wants to say, put the limit out there, maybe there's some dark liquidity, leave it out there for 10 seconds, then adjust it, we're going to allow you to do that. And the interesting thing about all-in-one trade ticket and walk limit, it isn't only that it saves you money, but if you're a really active trader, it saves you time. And the way I trade, having been around for a long, long time, there are especially times of the day, like afternoons on an expiration Friday, which is now every week, that time is more precious than, a couple cents of spread. And the great thing about those tools is they let you work multiple orders, manage the risk, and not have to sit there and, enter the order, cancel it, enter it, see the market move. As I say, I'm a big believer that time for some people is more precious than a couple cents of spread.
Yeah, I've already walked a couple people through how to use that, and they've been pretty amazed at how it takes so much of that out of their hands, particularly for those newcomer guys who don't know really how to do any of that can take that out of their hands for them is a nice little feature. Well, thank you for that, Alex. I saw that download come over on my iPad the other day. I haven't had a chance to fire it up and play with it, but now you've sold me on it. Now I'm looking forward after the show to firing up the old iPad and playing around with the new OX app. So we'll check that out. And Alex, thank you for that. And now it's time to keep on rolling right on into our mailbag segment.
Now it's time to empty the mailbag and see what our listeners have to say. It's the Mail Block.
All right, welcome to the mailbag. This is, of course, a portion of the show where you get to sound off and tell us what's on your mind, what questions and concerns are clouding your brain there, dear listeners. Looks like a lot of you are up in arms about what happened a week or so back at the CBOE with the outage. A lot of different questions on that, so we'll hit on a few of them here. First off, a question from TBD6. I guess he's to be determined at a later date. I love these handles. He says, the CBOE outage made me wonder, what do I do if I can't access those products again? Great question. We got a lot of different variations on this same theme. I'm sure you guys, Mike, and you guys, Mark, got a lot of this coming in as well. Of course, CBOE, one of the reasons this caused such an outcry over there is that CBOE has a lot of proprietary products that are locked to the exchange, SPX and VIX really being the 2 primary drivers of that. And for the first one, SPX, they're not really too difficult to find your ways around positions out there. You have a lot of other analogs or approximate analogs. You have the big futures. You have the futures options at the CME. Of course, you have SPY, probably one of the easiest and most direct ones to get off some positions if you have to in the S&P. So that's a relatively easy place to find a safety valve. VIX, though, not so much. Of course, VIX was down, the futures were down, everything was down, so you couldn't really do anything out in VIX. And finding a more direct way to get out of positions in the VIX probably was a little bit more challenging. And Mark, I know a lot of your clients come to you talking about VIX and asking questions about VIX. I'm sure a lot of them were up in arms last week. And what did you walk them through, if anything, for different scenarios?
There really wasn't much to do. If you needed immediate vol exposure, you could go into VXX. But that was about it. There aren't a lot of good there are no good alternatives to VIX other than over-the-counter stuff. And I think even the futures were down. if they weren't, there was no volume there.
Yeah, I have to check on that, but I'm pretty sure everything CBOE related was down.
Yeah. And the main issue was, you literally had a choice of VXX, which would have been which was intuitively based off of VIX, or really nothing. Or you could have gone in and done you would have had done a cash spread in S&Ps. But that was one of the major issues, is that VIX is a core product that most of the over-the-counter firms rely on for kind of quoting, and it's kind of their little crutch, and as a vol dumping ground. And for it to be taken away the way it was, it probably threw, now I can't quote this, but it probably threw a big wrench in the over-the-counter market.
Yeah, that's driving. This is, of course, VIX drives a lot of that stuff just for pricing and everything else that you just said. And I can't imagine how wide the markets were in VXX. I didn't get a chance to look that day. But if they're the only game in town and your only underlyings are essentially off limits to you, it's not exactly a desirable scenario for a provider like VXX to be in that position.
Yeah, if you're a high net worth customer, you can have a portfolio margin account, and that happens again. The haven, although it's not a great haven, because what's VXX going to trade, right? It's going to lose tracking too, because it's got nothing it can get its arms around without going to OTC. But if you are a portfolio margin customer, and I know that doesn't apply to everybody, one outlet at a time like that is to trade an offsetting market. So if you want to buy vol, consider buying either a straddle in the E-mini options or trading the spider. It's not a perfect offset, but in a portfolio margin account, you can pick up the phone, call your broker and say, hey, use these to offset that position. Because one of the problems you have is, even if you have a viable offset, you run into the one market's closed, one market's open option. And unless you have enough capital, you're screwed. You have absolutely no choice. You need to wait for the other market to open. I hate to tell the story, but keep in mind what took down long-term capital was one market open, one market closed, and you couldn't offset. And in the long run, it worked out, but in the short run, it destroyed the company. So the other thing is, and this is going to sound like it's corny advice, have the 800 number of your brokerage house handy so you can talk to a trading desk at a time like that, because at least the trading desk or the margin folks, if you are in trouble because something's going to reopen, at least you can have that communication. One classic story that I hear all the time from investors is not so much the product was down, but your site was down, and I don't have the 800 number. And if your site's down, I can't get the 800 number. So have that number handy and communicate with the trading desk. The sharper trading desks will offer some solutions, some offset, but it's not going to be perfect. I have an institutional piece of research sitting on my desk from one of the big vol desks upstairs, and they did I hate to say they're capitalizing on this, but they're really making the case for why you should trade it upstairs instead of trade it downstairs because of the event. And I hate to see anybody capitalize on somebody's technology difficulties, but having said that, it's a very real question. And if you're a small investor, an offset may be something you got to consider.
Nah, I can't believe anyone would take advantage of an outage like that, Alex. That would be far beyond the pale to see something like that. Like
That'd be ridiculous.
No one would be jumping around at the OIC conference last week promoting the jumbo/max SPY with the day the CBOE was down. That never would take place. No, I don't believe that at all, sir.
Jumbo SPY.
All right, next up, we have a question from Nick Milligan writing to us out of the scenic Great White North, a.k.a. Toronto, and he says to us, do you think the CBOE crash will spell the end of proprietary products like SPX and VIX? Another related question to the CBOE, of course, and I did do a lot of discussing of this last week out at the OIC conference. And there was a lot of hemming and hawing about this exact point, as you could imagine. I think a lot of the luster was transmitted over. I was only half joking to the products like the Max. I forget which one it is, Max or Jumbo, but the 10x SPY contract, which is essentially an SPX direct copy that you can trade that on multiple exchanges. And there was certainly a lot of interest in that on the day of the crash, and people looking at this in retrospect and saying maybe we need more of these products out there. But in the end of the day, do I think this is going to shut down proprietary products? I don't think so, but I think this does open up the regulators to say, hey, there are perhaps a few more risks to this than we as regulators perhaps perceived in the beginning. Mr. Sebastian, I can see you champing at the bit over there to jump in on this one. What say you to our questioner from the Great White North?
Next member, and I know a lot of people at CBOE, so call me a little biased, but the CBOE spends all this money researching, trying to come up with new products, trying to come up with things that are interesting. The only exchange that even comes close in terms of rolling out new and innovative products is maybe the PhilX. And then all these other vampire exchanges basically want to feed off of them, and it's a little ridiculous. What I would invite the other exchanges to do is to innovate instead of trying to suck the blood out of those that actually do put time and energy into coming up with unique and interesting products.
So that's a BS argument, because you can recoup your investment by charging a licensing fee and then do the trading community a favor and let the product trade on multiple exchanges. Because when you do go down on an expiration...
So then there can be a bidding war for the order flow, and then the fills get just as poor as what you might see on a single list.
Just the opposite. Look at the spider. Look at the the liquidity in the spider. Look at how much gets done upstairs. And here's the challenge. If you say there's an investment and you charge a 45-cent fee to trade, then charge the competitors a 45-cent fee. But bring the capital in. Kenny Griffith is going to the Supreme Court now to try to, litigate this. But the argument that you have sunk cost is a great argument, but there's a way to recoup that sunk cost, and that's charge a fee. Just charge the same thing you charge customers. Because what you learned in the last week, and what you saw again today with CBOE having an outage, is that you want extra liquidity in there. And the challenge becomes, here, list it on another exchange only as if we're closed, but give it to the similar market-making community so it isn't totally foreign to them, when they trade it. Having all these country club issues with you can't trade this and you can't trade this makes it expensive to trade. There isn't a lot of competition there. Here's the thing about both of the CBOE products. Those are pit traded. Those are pit traded. Why couldn't you open the phone lines? Because you can't anymore, because they're not really pit traded. They're
right. And well, that's actually, I think, a big argument. That's a whole different thing. Why is there such a push to kill all the pit trading? Which I think is a smart way.
Because it's expensive.
It is expensive, but it's a smart way to protect against this type of stuff happening.
I think that's going to be an unintended consequence of all this. I think is that pit trading might last a little bit longer, perhaps even mandated by the regulators as a safety valve for times like this.
Alex, I do have a question for you,
let me make a point.
A theoretical question for you when you're done.
Okay, but the other way to manage the issue of pit trading is to list it on more than one exchange. What are the most actively traded instruments today? They're the Spider, the Qs, and there's still an upstairs market in the SPX that's still very robust. The issue of trading in a pit is terrific. You got good price discovery, and now you finally have an auction so that the screens are real. But give the SPX to the Ken Griffiths and the Spear Leads, and get some real competition in there, get some real price discovery. It's the most expensive thing to trade. Fine. If you want to charge a fee for it, you have an investment in technology, fine, charge a fee, but let other people create liquidity. Because liquidity begets liquidity.
Yeah, well, here's my question for you, and this is just kind of an I don't know the answer. So like the S&P is 100 times, the SPX is 100 times the value of Spider. Why in terms of dollar terms does the S&P do so much more dollars on a single list product than the Spiders do on a product that's listed on all of the exchanges combined?
Okay, because that equation's wrong. The notional of the Spider and Spider option far exceeds the S&P.
The SPX?
Yep. The notional on the Spider and the Spider option and the E-minis far exceeds the SPX.
In terms of open interest and trading?
Yep. The notional far exceeds the SPX.
In terms of the options?
Mark, let me do this again. What part of yes don't you understand?
Okay, I believe you if you say that, but
here's the thing about the SPX. There's more open interest upstairs in the SPX than there is on the trading floor. There's more open interest upstairs. Why is there still an upstairs market?
Because the French need somewhere. The French need somewhere to trade, Alex.
Yeah.
But the French are paying the tax.
All right, this is a heated and quality debate. I like it, Alex. One last quick point, Alex, and then we'll wrap up.
Here, I can trade $1 billion of the SPX basket. I can trade $1 billion of the SPX basket, $500 wide. Tell me that's not liquidity, but I can only do it upstairs.
That's liquidity.
The French have to make their money somewhere. Okay.
Yeah, there you go.
When I worked at the CBOE, one of the big SPX desks was the JP Morgan prop desk, and there was a guy by the name of Bud Nagel who ran the SPX book. In fact, when you have Henry Schwartz in Chicago on the 15th, Henry ran the SPX book at Solomon Brothers and then at Bear Stearns. And every time we would go up to JP Morgan, Bud Nagel, who was really a bright guy and a nice guy, would say, "What's the open interest?" And we'd calculate it. And he'd say, "Well, some of that's long, some of that's short. You got to be a little careful." He goes, "I got more than that. I got more than that here at JP Morgan." and the fact that there's still an upstairs market, can be looked at two ways. There's capital upstairs, there's liquidity upstairs, but there's also an opportunity because people wouldn't trade upstairs if they could get done in the listed markets what they wanted to get done.
All right, I like this. Good mail block. I think we should do these more often, but unfortunately now we have to wrap it up and keep on rolling into our final segment, Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, where we talk about what's on our screens for the rest of the week into the weekend. And Senor Sebastian, why don't you take pride of place on this one? What are you watching for the rest of this week?
Employment. There's this thing called non-farm payrolls that I think may or may not be important.
I'm not familiar with that.
Yeah, no, that may or may not be important to what happens the rest of the week. I'm really paying attention a lot to VIX term structure. I'm starting to wonder whether there's enough players now hammering that VIX term structure that it may be permanently flattened out. I'm just
They finally stopped bidding up that crazy tail, and they were hammering it down now?
Well, I think you've got a bunch of people bidding up the tail, but then you've got a lot of people who are saying, oh, look, there's no reason to bid up that tail. I'm going to sell it. And it creates an actual market. So
that would be nice. It's not just these long-term ETPs buying the hell out of the tail, and that's it.
Yeah. So I'm wondering what's going on there.
All right. And Mr. Tusaw, what are you watching for the rest of this week? Obviously, non-farms on everybody's radar. Anything else in your particular neck of the woods that is catching your fancy going into the weekend?
Just right on the borderline with a lot of short premium going into tomorrow, so we'll see where it goes.
What about Goog? Goog back above the magical 800 level you were watching, trading almost 830 today, closing 830 today. Any love there?
Still too hesitant to get into that one.
Ye of the low risk tolerance, sir. Probably makes a good trait for a financial advisor.
Well, what I'm looking to do now, I'd love to ride the Apple wave in terms of the new dividend Apple, but Just waiting for things to cool off a little bit more on it for now.
Yeah, what do you think about all their talk about bonds and buybacks over there?
Well, in looking at it, I think they're really trying to. They've become Microsoft. It really feels like every step of the way, because in past earnings announcements with Apple, you hear things like, we got this new gadget. It's going to be this, and this. We're going to do this. We're going to do that. And I think maybe what Steve Jobs did before he died, he left a list of cool things that he wanted to invent. And I think they've come to the end of the list is kind of what it feels like.
They're still milking that list. They keep saying everything they come out with, oh, he touched this. He created a list of 100 products, and we're just still building them. Which, if that is the case, that's kind of sad, because then they're building products that were designed about 5 years ago.
Right.
Which isn't exactly too exciting for anybody in the mobile landscape where things change every 3 to 6 months. But is it interesting? You're right. They do have a little bit of a Microsoft sheen on them now, where they do have the dividend. The buybacks are kind of interesting. I think it's kind of their way of maybe thumbing their nose a little bit at the street, saying, hey, we think our stock is underpriced here. Also, I think it's stuck in their craw a little bit. They kind of have to be forced to pay that dividend. So they'd rather spend that money on buying back their own shares than they would on spending even more on the dividend. Of course, every share they buy back, they save the dividend. So there's a little bit of that at work, I think, too. Why should I give my money to you when I can buy back my own stock and send a message to the street and save some dividend money and everybody's happy? So a lot of interesting stuff going on, bonds and whatnot over there in Apple land to keep us guessing. Of course, the thing rallying about 10% post earnings. So a lot of Apple love back in the old mix. Maybe the Tim Cook must resign squeals will die down for a little bit now. As long as it hovers around 400, that seems to be his point of pain. When it breaks below that again, if it does, then he might be in some job security issues.
Time will tell.
All right, and Mr. Alex, last but not least, what are you watching out there in the land of OX? Hey, quick question. Since we were talking about the CBOE earlier, I know you calculate a lot of your Idea Hub stuff off the single name VIX number. So was the Idea Hub out of action when the CBOE was down too?
Yeah, and by the way, that's one possible solution is list some single stock vols and maybe get other exchanges to create a methodology. So I'm going to sound like a dork here. You could create a vol dispersion book, and then if you lost one exchange, you'd have a way to hedge. You'd have a way to recreate it. But yeah, it was not a fun day for any anybody in the industry that day.
Idea Hub and OX, the forgotten victims in all this, Alex.
Yeah. Well, we're collateral damage on a day like that. But anyway, what are we looking at here? Obviously, non-farm and energy. Nat gas lost around 7% today, but crude oil gained about 3%. So interesting things going on in the energy market, and you got a lift in almost all the energy companies, the drillers. And again, it's going to be another interesting expiration Friday. Now there's an expiration every week. A lot of the big names are back up trading near strike prices. So tomorrow should be real fun.
Good old non-farm. Send us rocking 1% up or down again. We'll see which way the yo-yo springs tomorrow. But unfortunately, that's all the time we have for the Around the Block segment. That's going to bring our show to a close as well. But before we go, I'd like to check in with each of my cohorts, my partners in crime here, to see what they have cooking in their necks of the woods. I know Mr. Tusaw listeners are a little bit late to the old webinar train when they're listening to this. It went on the night before, but maybe you can give them a quick pitch for what's coming up on the old webinar train.
Train will be rolling again in the month of May. Stay tuned Monday for some more webinar announcements. We have a few people that are looking to do something, but they could do this week, they could do next week. So we have people for May all lined up. We need to get the dates set up. More to come on Monday.
There you go. Stay tuned. TBD. They can stay tuned to RCM. What is it? RCMAM.com?
RCMAccess.com.
RCMAccess.com. Stay tuned to RCMAccess.com. You can find out more information about when the webinar train is rolling into a station near you. And Mr. Sebastian, what is coming up in the land of the pit?
I am speaking at the Option Insider Unusual Activity Conference on May 15th in Chicago. Come out and see me. Doing a webinar with Phil Flynn on of Price Futures Group on oil volatility on May 9th. Should be a fun one, especially I don't know if you know Phil Flynn, but he may be the only man I've ever met that is more boisterous than I am.
That's very boisterous and perhaps a little bit greasy.
A lot of boisterousity.
It's a high boisterosity quotient.
It is.
All right. Thank you for that, sir. I know a little bit about that event you're referring to. I think it'll be a good one. And last but not least, Mr. Alex, what is coming up in the land of OX?
Just highlighting a couple events coming up, and obviously come to the site, and there's stuff going on literally every day. But on Tuesday, May 7th, Jim Wyckoff, well-known name in the futures community, is doing a noon seminar, and an old friend of mine on May 8th, Dan Gramza, is going to do a using stochastics to trade futures. That's 11 o'clock Chicago time. And then a live event, May 18th in Charlotte. That'll be our traditional all day, which will, if you're in Charlotte or you want to come out, it's a live all day. If you want to observe it virtually, come to the site. And these Saturday's events, the Saturday live events, are now simulcast virtually, so you can be home with the dog and slippers and participate in the event live.
Thank you for that, Mr. Alex. And unfortunately, like Mark said, you can't participate in our Unusual Activity Forum live from your slippers, at least not yet. You have to do it live. You have to come on down to the CBOE and join us there. We've got a lot of great stuff going on. We got a floor tour, a bunch of great expert sessions. We rounded up a bunch of great speakers on the topic of unusual activity, and a pretty much overlooked topic in any event I've ever been to. I never really heard anyone sitting down and hitting on this topic, certainly not to the degree we're talking about it here at this event. So surf on over to theoptionsinsider.com. $99 gets you in the door, get you access to all that great stuff, and of course the floor tour and all the other great tchotchkes we're throwing into your registration bag. So surf on over to theoptionsinsider.com/events if you're going to be in Chicago on the 15th. We'd certainly love to see you there. And on behalf of Mark and Alex and Mike and of course myself, we want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show and sending in such great questions. Keep them coming. And we'll see you all next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.